And what I do in this one was a bit about trade mapping. So how much time are you spending on actually mapping trades out? There's a couple of conversations I've had with people recently of, you know, becoming very short-term focused, and people get very sucked into what's going on right at this moment and references that they're seeing on the day and just trading purely that, rather than trading the actual events that they're, or trading the sort of larger scale opportunities. And that's what I think people sometimes miss out on, that they miss those large scale opportunities because they're so focused on the short term. And it's also where you'll have people asking, well, why did the market do this all of a sudden? I didn't see that coming. And often it's just the case they've not really mapped not been mapping out what's been going on over time to recognize where some of these larger opportunities are. Basically, the idea of mapping trades out is creating a pipeline of trades. Basically, you're creating yourself a pipeline of ideas so that it's not just that you're coming in each day and you're just trading one trade after another trade. So sort of set up. The whole idea here is that there are going to be bigger trades out there. Yeah, there are going to be trades that aren't your sort of standard little technical pattern scalp type trades. These are the trades that have got much more scope to them. And these are the trades that kind of develop over the course of days. And this is what I mean by mapping trades out. And what you end up doing is you create yourself what I call like a pipeline of trades. So a number of trades that you know are going to become available, or perhaps not that you know they're going to come available, but that potentially could become available at some point in future. And that's where the sort of high value trades are, if you will. The ones that are perhaps developed 2 or 3 days ago, that people are a little bit less switched on to now. But if you map that trade out, you're going to know that structure's there. You're going to know that opportunity is available. Then what you've got to do is you've got to take that trade and you've got to ask yourself this. I so often sort of ask people this when they come up with an idea and they're like, oh, and I got short because I was looking for this to happen. And that's all well and good. But the way you've got to kind of look at it is you've got to ask yourself, when does this trade become a live trade? So what I mean by that is, at what point do you say this trade is now a trade I can play for, rather than just being a trade that is sitting there in the pipeline waiting to become some kind of opportunity. The longer they sit in the pipeline, obviously the more they get forgotten, and eventually you will get to a phase where they're just not really an opportunity anymore. It's a good example of this that I was talking to someone about recently, that there was an opportunity, a trade that developed, and I can't remember the exact dates, but I think it was early May last year in oil, break the lows, and the lows were about 18.10. Now that trade never materialized. The trade never was there. The trade never really became live. But I would suggest that that's not a trade that's still in anyone's pipeline of trades. To go and break the bad lows at 18.10 in oil from May last year, I don't think it's a trade. So you've got to also think about when this trade not so much becomes live, but when this trade, you can say to yourself, this really isn't a trade that I need to be thinking about anymore. And you can kind of like drop that off the list of potential trades coming up. So what you've got to think about then is, you structure these trades, and this all comes from having a detailed debrief, detailed map of what's happened recently. That way, not only do you just see a pattern, but you know how the market traded within that. And it's that detail that you can then see how it's traded within that, so that you're going to know if it's different the next time we get there. So then you've got to think about your trade execution. Do you have tools to execute a trade like this? And this is something that you need to be asking yourself more about when you're doing debriefs of things, is how could that trade be executed? So for any kind of breakout type move like that, you need to have different ways that you can execute a trade like this, depending on how the market's currently trading. So we're going to have a little look here at what I call a snap and run trade. And this is a way of executing a trade when you don't have a great deal of opportunity to beforehand. And this is one from S&P, this is one from last year. But it's the same kind of principles, same idea of move up, not right at the highs of the year, but move higher in the S&P, balance created, rolls away from this. So this is that tight range that we're looking for. So your initial idea on this trade is that if you can get above 95, you've got to move through to 18, which is the previous level, and then to the top of the range, which comes in at around about 35, and then 40. So that's the idea of the trade. Very similar type idea to the oil one that we just looked at. Same kind of pattern. This is where I do this as a pattern recognition thing. You've got news which backs this up as well. So this is the remdesivir news from the 18th of May last year. And what we're looking for on this one then is break up, same kind of pattern. If you've not been given an opportunity to get into this, because this has just been a reasonably steady move up, and this news comes in somewhere around here, steady move up, but then you get the snap. And as the snap comes, there's your chance to get in. So it's about learning exactly what that type of execution looks like. As soon as you see that snap, you get yourself, or you get into the point of entry, you say to yourself, right, what potential entry strategies have I got? That snap and run is often one of your last opportunities. It's kind of one of the last ways to get into a trade. So you see a snap through the level, there's the chance to execute. I'll bring you this one up. So this is then the trade. Very similar type move to that oil one. You've got a little high, pulls back, not really loads going on, and then you get this steady move through the range. So what you're looking for is previous highs 97. You're now looking for this to snap up. There's been no other real obvious entry point. You can see it's reasonably slow, reasonably sticky here. So there's nothing really going on that's saying you've got much of a trade here. But you know this is the high of the day. There you go. There's your snap. Leaves that little patch of low volume again. And this is now a chance that if there's not really been any way to get into this trade, which there hasn't, that little snap up is enough to get you in. Now it's that minor washback. The previous high, the kind of real level here was 95 3/4. That was the bottom of that large range. And that little snap should then be enough to get you to think, yeah, this trade's on. A little pop up. Now you're looking for continued buying. That's the bit you really need to see. As long as the buying keeps on coming in, you're fine. And this is exactly what you're looking for. We're already on a reasonably bullish day. You've got news backing it up, and now you've got a range to sweep through. So as long as the buying keeps on coming, as long as we don't just run out of energy and you actually see the pace and the activity increase, this all looks good. It's when that doesn't happen, which is where you need to doubt the trade. You need to start thinking this probably isn't going to actually progress in the way that you want. So there's one thing to have that snap to get you in. That's the first bit that you're looking for. The next bit then is to have the continued buying. So the activity stay up, the push to keep on coming to the upside. So what you don't get much rotation back. It then just keeps on pushing and pushing higher. So you see here, pace doesn't massively change, but after that snap, progressively continuing up in a similar type pattern. So it's not just about the execution in, it's about then the run phase of the trade as well. And this, as you can see, then continues on. We get the move all the way up towards 10, and then you get a whole new trade where you get this market gets absorbed and absorbed and absorbed there. That allows a further continuation of the move. That's a separate trade. And so you get, I'll just show you the little spike up. There we go. You get that little kick up to 10, more low volume put in. And when that low volume gets put in, you can then use that same kind of pattern or well, not the same pattern, but you're using the low volume as support, what then happens is it builds more and more and more volume there, which then allows a continuation of move. But this is all about having a pre-map trade. You know where the trade is, you know where you want into the trade, and then being able to say to yourself, right, this is the only entry point that I've got. This is the chance to get in. Snap, that should be enough to say, right, go for it.
If you find this video interesting, if you want to go deep into the AXIA training method and how our trading team of 7-figure traders develop setups and strategies and how they learn to build the most profitable trades across all market environments, then join me in this workshop. Now in this workshop, you're going to learn 3 powerful steps we use to train all our traders on both our London and our Poland trading desks to help build incredible levels of consistency. You're going to learn our 2 main strategies for how we perfect our trade timing before we enter every single trade, how to avoid those large losses, and our main method we use to identify them that saves our traders significant amounts of capital. Finally, you will learn how our traders use the power of network learning to find market patterns quicker than ever before, so you shortcut that learning curve. In the workshop, we want to program your awareness of elite performance, to program your ability to choose the right setups, and program your ability to be a consistent trader. And I can tell you this, you'll never see the markets the same again. You'll never look at the markets with a narrow view of getting lost in all the noise and confusion. You'll take your first step towards a deep edge market awareness. I cannot wait for you to join me in this workshop. And I think you're in for a massive paradigm shift in your understanding of how to develop as a trader. So join me by clicking on the top right-hand corner of the screen and sign up for this powerful training workshop, or visit elitetraderworkshop.com.